today I want to look at why the US dollar is at an inflection point, why it's very interesting at this current moment to look at FX markets amid all the other crazy price action in other asset classes. Outside the tastyfx world, would you pull up the DXY chart for me?
Sure can.
Dollar basket. I don't look at this a ton because I'm looking at, all of those spot exchange rates day in, day out. But it is interesting to pull up. It's a nice reference point. This is a historically important dollar index weighted against other currencies, about 50% euro, yen, some others. And right now we are eclipsing the 100 level in this index for the first time, touching it for the first time since August 1. And we haven't traded through it since May, early spring, when we were in free fall down from a strong dollar at the beginning of the year. And looking at the buildup, how we got here, all green candles since the October FOMC. Yep, zooming in there. And so we are on quite the tear for the US dollar. And, this 100 level, while you can't trade this product necessarily, there's some ETFs you can have some exposure to with relative weightings, but it is important because this is a headline number. I'm sure if you type in DXY 100, a ton of Reuters, and everyone's already written about it, I'm sure, and more to come. And so...
written about it in what way, you think? What way? Like, what are they saying?
I mean, just DXY breaks 100.
Oh, okay.
And I don't know.
Well, let me know when we start seeing the headlines that say we need to buy dollar now.
Okay. Exactly. But now this comes back into focus and more participants perhaps looking at this US dollar as it prepares to mount a comeback or reaches the top of its range. I'm going to talk out of both sides of my mouth right now just because this story has two real cases for a dollar continuation or a pullback. And I'll take you through what dollar markets may be suited for each from a tape action perspective. First, I want to pull up euro dollar here because that is the highest weighting. If you're looking for a trade idea from looking at this dollar basket, I'd look to euro dollar first just because that is the majority of the weighting of that index. And so you'll see pretty similar tape action, but here now we're in the spot market below 115 for the first time in the same time horizon since that August 1 move. And sets up, if you scroll back, zoom out a little bit, here we're getting a little bit of a nice range where we have hit this 115 level a couple times and bounced back. But also, as you know how we started the year, we've come up from around 105. So a lot of historic tape action for dollar continuation. What's interesting now, though, is I saw something come across my desk that Trump officials are now looking into dollarization, kind of another lens than what we assumed when the administration took over, that they'd want a weaker dollar and have gotten that thus far. But when it comes to certain environments like Argentina, some of these Latin American countries, they're looking into now why dollarization, pushing that agenda for more countries, just more involvement as a result of not letting China do a similar thing, some kind of national security, some global dominance narrative, whatever you want to insert. But it might be a time when the administration is starting to reconsider, what their efforts are, if they necessarily want a really weak dollar, if they want to kind of bring the dollar dominance back a little bit. So that could be, if that's a pivot from that agenda, then that could be a major long-term dollar catalyst to get us back to where we started the year. But at the same time, I mean, historically, FX markets are mean reverting over the long term, and so you have a really nice historic extreme if you want to play some of this range coming off of 7 positive days in a row for the US dollar. And so this chart's interesting, looking at the dollar Swiss franc. That's another interesting pair that is set up from a tape action perspective similarly, top of its range, just now hitting 0.81 for the first time in a while. And so we've seen it struggle here. And so I'm looking at how it performs here if we trade straight through here or we start to get some chop, because this could look like the past 6 months of price action, or similar to euro, we could just keep going higher and higher. But from an interest rate perspective, this one interesting as well, because you start to think of, the dollar has done super well. Maybe it lets off the gas a little bit. But when we talk about the interest rate picture and the growing chance that we don't get a cut in December, that is, even though it's growing, it's still at around 38-40% that we don't cut. If that is to become an actual reality, then this could theoretically have a lot more room to run if there is no cut. And conversely, the Swiss National Bank is now considering maybe getting into negative rate territory. And they're already at zero, and that opens, expands the lifetime of the carry trade that is available in this pair. Whether that becomes more and more popular, that's kind of how we saw it in the dollar-yen case, is as that becomes more popular, it starts to reflect in price action as well. Here, maybe more of a hidden storyline. But those are the two markets that are really interesting to me. If you're trying to trade the range and say US dollar might give some back, Australian dollar is interesting to me, just because that has kind of a different risk profile than, like the dollar Swiss franc, where the Swiss franc would have also some haven flows. This having some, historic correlation to U.S. equities, Chinese equities, in the sense of risk on sentiment bolstering this Australian dollar. And we've seen this be one of the most mean reverting pairs this year without, as extreme of a dollar fall off. So this chopping around 64 to 66 cents could be very interesting for someone that is trading the range and not necessarily taking a long US dollar position for the short or medium term. That's what I'm looking at today, and why dollar's interesting to me midweek post FOMC as the government shutdown continues.